Stocks had a volatile week and they're probably not yet have stopped falling, and I'll explain why I think that. Dollar, on the other hand, collapsed versus the euro, pound, and yen as the other currencies pop against the dollar. So far, gold has taken advantage of the weak dollar and at least not dropped, and it's trading next to records. We'll also look at Bitcoin as it follows Solana down, and it looks very vulnerable. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, March 7, 2025. Tomorrow is March 8th, International Women's Day, so please don't forget to honor and congratulate and just wish them very good health, all the women in your life. If you're a subscriber, stay tuned. We'll be covering quite a bit of securities, for example, market breadths, crude oil, euro, British pound, and Japanese yen. I should add will be covered in the members only section, as well as ETFs, foreign ETFs, large cap stocks, and some of the speculative securities, as well as gold related. All right, let's look at S&P 500. So as always, I'm using my proprietary Master Charts Trading price action indicators. You can see them on this chart. There's green, blue, red, and yellow lines. You can find out more about them by going to the description, and you can have them on your chart once you sign up. All right, so S&P 500 hit a record high on the 19th of February here, a couple of weeks ago, and been pretty much falling relentlessly since. So let's look at it from a weekly perspective first. Weekly just means that we're seeing the action within the candlestick. So each candlestick is a whole week's worth of activity. And notice that the past 3 weeks we've basically been falling. Additionally, this week's candlestick is not very bullish at all for multiple reasons, and I will explain them. So number one, it's a red candlestick, meaning that the close is below the open. Additionally, even though we're seeing that we have touched this blue support resistance line, so on daily chart we can actually see technically a signal to buy. That is a signal to go long, to buy. However, I will also show a couple of other indicators that I am following, and I don't know if it's gonna I don't know if it doesn't look like we're done correcting. That's what I'm trying to explain. So this candlestick does not look bullish. It's a red candlestick. It's a large red candlestick. The tail from the bottom is very small. So in other words, throughout the week, mostly the bears had the control of the action, so to speak. Additionally, the close, which occurred this week at 5,770, is below this previous low, which was at 5,773. So technically speaking, we broke the lows from January 13th. We can look at it on the daily chart as well. And there it is, January 13 lows. This implies that we're seeing a lower low. So on this daily chart, we can see that we just made a lower low relative to this January 13 low. Not a great sign, not the end of the world either. Again, back on this weekly chart, this candlestick, the red candlestick, does not look complete, and I think more downward pressure is likely to unfold next week. I will give you a little bit of teaser for the market breadth indicators that I follow. So I do look at the market breadth, and the members only section will cover market breadth in more detail. Looking at this particular indicator, which is 10-day exponential moving average, 10-day moving average of the advanced decline issues. So it's ticker symbol on StockCharts.com, $NY AD. So how many stocks are advancing? From that number, we subtract how many stocks are declining. We plot them on this chart, and then we are making a 10-day moving average of that number. So looking at this particular number right now, you can see that yes, we're in a negative territory, so we're below zero. In other words, more stocks are declining and have been declining for a little while. Now we're somewhat oversold. We're not yet deeply oversold. Ideally, we should be below this red minus 600 line, as in, for example, occurred in December of last year, at which point we had a more or less decent rally. Now this time we are actually all the way down to the 200-day moving average. On my chart, we're down to the blue line. I'll show it to you. There's a 200-day moving average, and we're testing it as we speak. Notice that my indicators do not use averages, or rather exponential moving average, or any average for that matter. So currently, if we look at this advanced decline line, we can see that yes, stocks are somewhat oversold. They're not deeply oversold, and I think we will retest this lower levels for the advanced decline line. By extension, we are most likely to continue lower. Although technically speaking, we do have a buy signal, and it looks pretty good. It looks like a green candlestick at the blue support resistance line. So a bounce cannot be ruled out. We could see something like this, maybe a shallow bounce and then a lower low, perhaps another shallow bounce, another lower low, and then finally some sort of a bottoming action. But it hasn't yet occurred. So I'm not at all sure that we're done correcting. I think we will continue correcting into end of March. Then we'll see where that takes us. Obviously, the situation, the things that are moving at insane speed right now, and such as trade alliances and military alliances being challenged all around the world, are not helpful for the stock market, which likes stability more or less. Dow Jones industrial average, kind of similar pattern. Again, we are seeing a buy signal as we speak, but once again, I am not so certain that we are done correcting. In fact, if we look at QQQ, the Nasdaq, we can see that we already broke below this blue support resistance line. And if we look at small caps, IWM, we broke way below the blue line, and we broke below this red line. We're very close to an outright bear market signal for the small caps. So bear market would begin if small caps IWM drops below about a 200 level. IWM is the Russell 2000 ETF. So not 100. Obviously not 100%. I'm not sure that we're done correcting for stocks. Let's look at other securities that we trade. Euro versus US dollar, big rally. I nailed the bottom basically back in February. I wrote here possible bottom. I nailed it more or less. We got a rally. Additionally, the important thing is that we have closed above this blue support resistance line, technically speaking, meaning that euro has now re-entered a new bull market. In other words, there is a good chance that euro will continue higher. We'll look at it on the weekly time frame, but notice this giant, really big, this is a gigantic candlestick for a currency especially, and it's one of the biggest, like the latest, the previous one was in 2022, and this is a weekly candlestick, so big gain for euro. Again, we are now in an uptrend, technically speaking, for euro versus the US dollar. Why is that happening? Well, let's turn on the news and see there is a lot of things that are moving right now. USD versus JPY was trading in favor of Japanese yen. So notice we're now currently right at this red support resistance line, and I think Japanese yen will be winning this battle, and will continue lower. This currency pair will continue lower, meaning that dollar will continue to depreciate. British pound, same thing. It is currently attempting to break out, and if it does manage to break out, then British pound again will be in an uptrend versus the US dollar, which further will not help the dollar. So here is the dollar itself, currency index DXY. So dollar hit a 2-year high in January of this year, January 13th. A few weeks later, we saw a attempt to go higher. So on the 3rd of February, I wrote here is a topping. Again, I nailed it, and it continued lower. So there's that shallow bounce that occurred in February, into late February, and then non-stop 3, 4, 5 days of selling. Again, technically speaking, we have closed below this red support resistance line, indicating the dollar has turned around back into a downtrend. Can it hold support here? It's possible, but it doesn't look that good. So we're seeing reversal of fortune for the dollar. So dollar depreciating just depends on how you look at things. Could be a good thing, could be a bad thing. We will see where this leads us. So dollar and gold usually trade in opposite directions because gold is divided by US dollars. So US dollar on the bottom is getting weaker, smaller. Gold is moving higher as a result. And gold is already in a very strong uptrend, and it's next to records. In fact, you can kind of see previous alerts that were done right around the blue line. So this is how we trade. We go, the stock continues higher, pulls back towards the blue line, we'll buy it there. And notice this just nailed, this blue line just nailed the action, and we're now at records. The latest opportunity was 45% gain for the gold. And let's finish up today with Bitcoin. Bitcoin is traded 24/7. So currently Bitcoin, so this is an all-time high, occurred on January 20th here. Since then, basically Bitcoin has been under pressure. In fact, this action here is quite volatile. We saw a low below the blue support resistance line, close below it, big rally on the 2nd of March, and an equally huge drop the next day, with another bout of volatility in the next few days. But today and currently we're seeing a weakness and a break below this blue support resistance line. Now, blue support resistance line just means that we're looking to buy. Technically speaking, again, there was a signal to buy Bitcoin, but I am not again so sure if what we're seeing is not one of those dead cat bounces. So there's a shallow bounce, and maybe we'll see something like that, and then another leg down. So if we do get down to the red support resistance line, which is 71,000 or so, and most likely it will collapse afterwards. So yes, in the past we have traded Bitcoin on the upside. You can see it was very successful if we just simply buy at the blue line. But prior to the breakout, which occurred in 2023 in February, about a year ago, we were doing the opposite. So you could have traded on the downside. So notice this downward facing arrows, very successful. So for example, this alert back in April of 2022 resulted in over 60% gain because on the downside. So this is not a great looking chart for Bitcoin. And additionally, if we look at Solana, so there is Solana. I've never even heard about Solana until very recently, but apparently it's important. So we're looking at similar action, and it's quite bearish. And also notice that we have closed below this red line. So technically speaking, the bear market for Solana started right there on the 17th of February 2025. So after this, we're seeing lower lows and lower highs and opportunities to sell short around the red line. So for now, I am looking at Solana from a point of view of downtrend, and this could mean that Bitcoin will also continue lower, although of course there's no way to tell for 100%. And that's it for this week's recap. Please let me know if you have any questions. Head over to MasterChartsTrading.com, sign up for one of the products. So again, if you need the indicators, you can sign up on TradingView.com for free. That's a free TradingView.com account. Come back to my site, MasterCharts Trading, sign up for one of the products that contains the indicators. So we have the trading indicators as well as the packages, trading indicators with newsletters, with my newsletters. And then once you sign up, I will open the door for you on TradingView.com. Very easy, even though it sounds complicated. If you want the newsletters, so I send out daily alerts as well as weekly members-only videos for the various securities that we trade, such as ETFs, foreign ETFs, large cap stocks, speculative securities, as well as gold-related securities. And that's a newsletter. All plans come with free 7-day trial, so you have 7 days to try out the services. If you don't like it, you can always cancel. Again, the yearly plans are the best to go. For example, $49.95 per month for both indicators and newsletters equivalent. If you pay a year ahead, I think it's a very good deal. If you don't want to pay yearly, you can buy monthly at $59.95 per month. Again, it is a very good deal because you get a very powerful indicators which you could trade yourself with, as well as my newsletter to get alerts about various securities that we trade. That's it for this week's recap. Please don't forget to hit the like button, subscribe to this channel, share this video. Thank you for watching, and have another great trading week. Bye-bye.